The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. And of course, today being the 15th, we're halfway through the month. And look at this. The Dow's up 89 at 20,984. S&P is up 12 at 2,403. The composite, let me just do this here because I want to go step by step. Beginning of the week, let's just take time here. The E-mini is up 1275. It's at 2401.50. The previous high was 2403.75. What's really important about this is that the MACD has deflected up, which allows a little bit more room to the upside, but the stochastic is very poor at 75%. So we're seeing a move to the upside that isn't really confirmed in the indicators as it stands. What you've got here is a 120-minute chart making a leg D in what I call a price-time match. Hasn't yet got to 2403.75. It has until 2 hours time. Let me just check here. So that's a 120-minute chart. That's another. Oh, it's got until 4 o'clock this afternoon to try to get to 2403.75. There are a couple of things that right now that are suggesting that we might be looking at a lot of resistance right in this area. So let me just move this aside. That's the 120-minute E-mini June contract. I'm going to just put it down here, make it a little bit smaller. And I want to show you, oops, that was the wrong chart. There we go. Okay. What we're looking at, if I just make sure that I've got the yes, is that within the context of markets as we are looking at them, you've got the Dow, INDU, still way underneath the 21,169 all-time high, a little bit under the 21,070 high that was made at that peak B. This is part of the pattern that is in this sideways consolidation of a falling axe formation, lower lows and lower highs, and we'll see how we close. Meantime, back at the ranch, this is the 11th week of the consolidation. So this is a very important week because the MACD is still very negative in the weekly chart. The stochastic's good at 80%. So let's go through the numbers and I'll tell you how I'm looking at this and why I'm looking at it in this particular way. So QQQ made an exact double top at 138.63 on Friday. The 120-minute chart said, yep, it made a double top. The MACD had to cross positive, which is done. The stochastic was pretty good. I think it was at 88%, but now it's at 90%. And now we've gone to a higher high, and this suggests that this could be, in fact, leg D slash, let's call it D for now, in the 120-minute chart. What it says is that 130 in the NASDAQ QQQ Power Share Series. At 139.06, this is another good green candle. Since the low that was made April the 13th, you've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18, 19, 20, 21, 22, 23, 24, about 25 sessions, of which only 5 have had little tiny red candles, either negative or it made a higher high but closed a little bit weaker. That, in fact, is very good action, but it's making the 137.95 area, the 9-period exponential moving average in the daily chart, really important now. Why? Because now it's been touching it. Before it didn't. It was just way above it. It was basically not just walking the 9-period moving average. It was running the moving average. Now what we've got is a leg. Let me just double check to see what we've got. 695.89 And so far this morning, 694. Oh, we've got a peak E in the on-balance volume, potentially double topping. So I'm going to be watching this really closely. I'm going to show you why I'm looking at the NASDAQ and say upside now. It could be a little more, but it's getting limited because at this point you're getting closer to a turn down that's going to start to test support levels. All right. So that's that. IWM has had a very nice move so far today. It's up 1.21%, up $1.67 at 139.18. And we were short, and we've just got taken out. The reason why we're short, we're making lower lows. The MACD and stochastic were very poor. So this is, I'm calling it for now a counter trend move. It could fail, but it's a counter trend move. And 120-minute chart hasn't taken out the previous highs of 138.98, double top. The high so far is 139.23. So I'm going to be watching that very closely. Now, gold. Gold had a very nice move earlier in the day, still up 6 points at 12.33. What I'm looking at, I actually did Larry's show earlier, and what I'd shown was there was a left side, right side price time match taking you to the 15th at midnight, and now we're into that area that I was looking at as resistance, and we've had a pullback from a peak E, and the stochastic is not that good, but the MACD is pretty strong. I say it's not good, but it's at 75%, it's okay. And that suggests to me that gold is just about, it's having a bit of a pullback. If gold can hold the 1231, 1229 area, and by tomorrow this time, it's running again, and it's over the high of the day, of today, 1237.4, that'll be very good action. If in fact it's down below 1231, I was going to say 1229, but no, 1231, that's going to be poor action. And if you look at silver, it's almost got the same thing. There's an alternate count, made a peak D just under the 200-period exponential moving average. MACD is still strong. Stochastic's good at 87%, but turning down. And I suggest you at 16.72, 16.61 must hold. Otherwise, it's got a problem. Now let's look at crude oil. Crude oil itself had good news over the weekend. It's had a leg C in the daily. Question I was asked, is this a counter trend rally or is this the real thing? I think it's just a counter trend rally. It's at 49.20. Oh, it could touch the 51.90s, the 200-period moving average in the day. I think it's going to take quite a lot more. So I'm looking at it. This also has made a peak D in the 120-minute chart. I'll give you the parameters. If crude oil by tomorrow morning at 8:30 at the opening of the 8:30 hour AM is above 50, I'm going to have to say that's very good. The 120-minute chart is recycled. But if in fact it's pulled back to 48.20 or lower, $1 lower from where it is right now, I'm going to suggest that it's just a bounce, a news-related bounce. I don't like news-related bounces, I like the real thing. And I just don't see the real thing right now. I think there must be a ton of inventory out there in crude oil. Okay, so now some gold, silver, dollar, and bonds. So we want to look at bonds right now. Bonds are holding us down 4 at 151 and 10-30 seconds. I just think interest rates are stuck in a range right now. But what's really interesting is the dollar had a very sharp pullback earlier. It's trying to come back a little bit, but yes, it is under its major support level in the monthly chart, in the weekly chart. Not very good. I'll be back. Basil Chapman. Dow's up 80 cents. I'll be.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Let me just do this 2-minute chart quickly of the E-mini. I believe we've just made a peak E at 2402.25. If there's a break above, that would be very good. If it goes to 2403, if it breaks into the 2404, is of course new all-time high. But at this point, just watch out because the close below 2399 on the 2-minute suggests that there could be a pullback that will impact the 10-minute chart, which is in leg E, somewhat overbought technically. Yep, there's that 2399 area again. A close under 2397.75 in the 10 minutes, which suggests that, at least for now, we could be looking at some kind of a short-term top. Question about FTNT, which is what? Is that 40net Inc., I think it's a financial firm. Leg C in the monthly chart. I got this as more an F than an A in the 10 minutes, just a news-related spike to the upside. Leg E in the weekly, and I'm calling this a leg E in the daily until I see other evidence that it's a brand new A. It's an E, and I think it's going to be pulling back. Be careful. At 40.51, it needs 41.70 to really break to and hold to break to the upside. My thinking is that if it takes out 40.52, if it hits 39.40, this move is all over for now. It's going to go sideways. No, it's still a strong-looking stock, but it just needs a bit of a rest. And the other question was Royal Gold RGLD had a spectacular move. Let me just do this if you don't mind. Okay, Royal Gold RGLD. I'm not sure it's the same sort of thing. Another big sudden spike up. I'm calling this leg F/B. My bias right now on the 120-minute chart is to call it a G, and it's probably going to be pulling back a G/C. But what's really important is that it's had a spectacular move. When it was underneath the 30s back in January, December, January, it just looked terrible. And then it had a powerful 1, 2, 3, a red candle, then 1, 2, 4, 5. So out of about 7, 8 candles, it's had some really beautiful up moves. And then it took a breather at A minus. Now it's peak B, a leg B in the monthly. And what's really impressive about Royal Gold is that it is way in the upper part of its range, all-time range, from 100.84 back in September of 2012 to the 28.90. What was that low? 24.68 low back in January. 24.68. Wow. 24.68, and it's trading now at 77. That is a massive move. A 45-point move. It's looking very good. So Royal Gold, outstanding looking stock. Weekly chart is in leg D, and as I say, this is a tough one, but based on the MACD and stochastic, I'm going to say this is not just a single leg A to the upside, actually B, but it's more likely a B that should go to a C and a D. This is a very good action in Royal Gold, trading at 77.68, up 62 cents. And Maxwell is a question. MXWL is a technology stock. I can't remember what they do. Maxwell Technologies, monthly chart just stuck in a range. It's at 6.09 right now, 6 cents. Leg F in the weekly. MACD is still good. Stochastic's pulling back at 80%. I think it's getting a little tired. Had what we call a rogue wave spike to the upside when the technicals were still negative. A few days ago, it spiked up and just briefly, and then came back down. So I'm thinking that it needs to consolidate. So between 60.28 and $5, $6.28, and $5.88, that's the range. When it breaks either one of those, it's going to be positive if it breaks on the upside, negative if it breaks on the down. My eye says that there's a real good chance that it's going to be pulling back, and that it's probably going to retest the 580 level. It was actually 578 level from the 3rd of May, and we'll test that. That's the way I'm looking at it right now. But if you're holding it, you've held it for a while, I just keep holding it. It's just a very steady stock. Okay. Now, there was a question here about what about S&P? What about this move today? This gap. Look, the close, the high on Friday was 2392.44. The low today is 2393.94, a point and a half higher. Is that going to be filled in? I suspect it's going to be filled in. I am impressed with the action. I can't say I'm not. It went to 2404.05. Oh, that's a new all-time high. So that I cannot just miss. This is leg. Ooh, for now I'm going to call it an F, but it might turn out to be F/B. Right now I'm calling it an F because the MACD is really not that great, and the stochastic's down below 80%. The on-bounds volume is very poor. So that's what I'm doing right now. Day is young. Let's see what happens. So, okay, so we've got all those out the way. I want to just do this, if you don't mind, the 10-minute chart. So the 10-minute chart of 2400.25 on the E-mini, I think that this is a peak, Ian, that is going to be pulling back here. And I would not be surprised if 2398 is tested quite soon, within the next 10, 15 minutes. What's really important, I wonder if I've still got it. I did this for Larry Show. Crude oil, yeah. Crude oil went to a peak D, CF/D, in the 10-minute chart right there. And now it's pulling back. It made a high of 49.66, trading now at 49.20, still well within a tight range. My thinking here is that this is a bounce. I'm going to treat it as a bounce. This is a 10-minute chart. Treating it as a bounce, and we'll see what happens, because if it starts to go under 48.80 anytime today, that's going to be a big negative, big positive if it closes on the 10-minute bar about 49.50. A couple of things I want to look at here. Gold's GC, continuous, gold. Right there. Okay. So that went to a peak E. And you see this trend line that I drew in when I was doing Larry's show, and we were way down. This is Larry's show at 9 o'clock. We were right there at the D. And I drew there and said, it should be strong resistance. And we've had that strong resistance. So what happens to gold now is going to be very important. It's still up 6. That's pretty good. So I'm watching it closely because if gold breaks under 1232 in this 10-minute chart, it says be careful, 1230 would be the next level of support. But moving to the 1235.20 area, that would be good for a bounce, continuing the bounce. Did I do everything? No. I want you to talk a little bit, if you don't mind, about the TLT. Let's see, because there were other things that were asked, but I'm going to just do this. Why? Because the TLT at 121.05, my thinking is that the Dow on your chart, on your chart, S&P, you skipped wave C, I think, called it a D. Oh, boy, I've got a couple of people in the den who have studied the Chapman wave methodology, and they are perfect with eyes. Oh, no, I didn't. What happened was I took the low of 23.22 made on March the 27th, peak A, peak B, peak C. There was a sharp pullback, but it held the left side low. And there wasn't an inside buy. They went to ABC, so I automatically got the overlapping D. So I called this a D, and I called that an E, and I called that an F. I could have restarted it, and then I would be at an E right now, if that's what we're talking about. No, I'm doing it very strict, just alphabetize all the way up, and this it takes out the low. Hope that clarified that. I'll be back. Basil Chapman, Dow's up 80, S&P's up 11. Let's have a look at that 10-minute chart right there.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so cyber, I was asked about CyberArk software. And this is security. It's up 22 cents today, but actually it's looking very poor. Gap down, huge. It's not doing very much at all. So that's that. And then TLT. Frank has a great chart of TLT. He says his favorite. Is that the favorite monthly chart of the TLT? Well, if you're looking at the TLT for a monthly chart, every one of these pullbacks has seen it hold this uptrend inside track propellant support level since 2011. And it's right back very close. All I can say is make it simple. It's at 121. At any point in the next 2 months, if the TLT breaks under 115 support, it's broken that support. And the next thing is 106 is a 200 period exponential moving average. So it better have a rally. I'm thinking it will rally, and I'm thinking it'll rally, and the market will have its digestive phase. But the H pattern that goes to an M is the weekly thing. That's what you really want to look at. So let's go through questions here. So crude oil, I'll just review one more time. Crude oil, nice move up. I'm a little suspicious when it's news related, because I really, I typed in here the other day, I was asked about it, and I said this bar, the bar of the low of the 5th of, in the continuous contract, the 5th of May, that's a kind of, not exactly, but it's a kind of Chapman wave Roman candle. When it occurs at the top, it's very negative. If it occurs at potentially much lower down, not a bottom, but much lower down, it becomes bullish if there are two closes over. In this case, I said 47.60s. Well, I can't remember when I typed that, but there was a close of 47.33. Nope. Then there was a close of 47.83. Yep. On the 11th, and a close of 47.84. Yep. On the 12th, and now we've got the spike up. So that is a positive. I still want to call it a retracement failure mode, meaning that I think lower lows and lower highs. And every once in a while, you get a sudden spike to the upside. You've seen this in the weekly chart many times. Up at the 49.66 is the 9-period exponential moving average in the weekly. I don't think it's going to go much higher than that. And then I think it's going to be pulling back based on the arch going to the lowercase h to a lowercase m pattern in the monthly chart. That's really what I wanted to say. So I hope I answered that. Yes. So yes, Frank, the rising channel is still intact in the TLT monthly chart. Next question I had was, yes, so GDX, the question about the GDX. At this point, I do like it. That's the gold miners. It's trading at 22.86, up 14. But my recommendation to subscribers is if we want to buy a gold stock or a silver stock, but we want to do it lower down. Why? Because I think there's going to be a little residual strength in gold at this particular time. I just don't know about sustainability. I do like the move that's happened over the last 5 or 6 sessions, but I must tell you, we've seen it many times before. The technicals haven't improved that much in the weekly chart or monthly chart to suggest that this is a brand new move to the upside. However, I think there is enough to say that the dollar, trading at 98.88 down to 30 cents, is struggling, and it is under. It's very important. The monthly chart is still good. Look at this. That weekly chart, this is a very clear, change the color. That blue line that I'm showing right now, that's very clear. In fact, let me do this. It'll be better without the little dash. Let's just make it single line. And let's make it a single line, then let's make it transparency 50%. Now you can see the bars inside. You see the bars inside? It went onto the bar right there the week of the April the 28th, week of April, the May the 5th. It closed decisively under. On the week of the 12th last week, it closed right. It went rallied and went right up to the line. Couldn't close above. It's still under the 9-period moving average. And look at this. So far, 2.5 hours into today, just over 2 hours, and it's underneath again, that major line. So I think the dollar's struggling, and it's telling me that just for now, and I think later on it's going to rally, but at this point it's really working hard. The euro is the one that, look, the euro all of a sudden looks like the S&P, right? Trying to get back to that high of 1.102. And I think it might try for that, and then it'll fail But in the meantime, that means that this week, if it goes above it, it's leg C continuing into that up channel resistance. If it's next week, it goes to a D and a very quick C to D. It doesn't go very high, and D says, oops, be a little careful. So euro-dollar is still acting well. USD JPY, on the other hand, that's the US dollar. This is the US dollar Japanese yen currency pair, had a nice bounce. What's going on? That's the weekly chart. Yep, there it is. Okay, so the weekly chart suggesting that the, let me see, can I do that? Yes, I will. So that the falling ash pattern says a break is at 113.60. A close over the last highs of 114.32, 36, 36 back on the 9th through 11th of May. A close above that would be very positive. A break under 112.80. It's at 113.60 right now. So a break under 112.80 says, uh-oh, short-term daily sell signal, not yet a sell mode. We'll see if it goes to sell mode. And the weekly got repelled at the resistance line. So those are the levels we're looking at. It needs 114.20 to say it's going to try to tackle the most recent high. And a break under 112.90 says it's going to test 112.70s. SMHs right now broke out, went to another higher high. Leg D. Whoa, this has been a tough one for me. The MACD is still very strong. Stochastics at 94%. I think I mentioned over the weekend, we've got to watch Applied Materials because that's just been an absolute house on fire there. Look at that. Leg B still unbelievable. B for believable. It's very strong. And the weekly chart is in leg E. So there are not that many in the overall semiconductor index that are acting fantastically, but it's being dragged up by leaders. Look at this Intel on the 200-period moving average down for acting very poorly. What was that? Broadcom BRCM. I think that's Avagio, AVGA, AVGO. Yep, nice move up. Oh, it recycled. AVO. This has to be called C. So semis could still go on a little longer. Can't believe it, but it is. Look at that move. When it's all over, they're going to take quite a bit of a breather. I'm calling this F/B in the monthly. Broadcom semis was Avagio, and they kept the symbol AVGO. So it's actually Broadcom. And, wow, legs. I have to call it, no. DEF. This is going to be G/C. That's what it is. Because based on the MACD, I'm calling it G/C. So here we go. And there it is. Yes, so the question in the dead S&P wanted to know, what about the semis? And someone had mentioned, are the semis the biotech bubble? I don't think they are. No, it's not on the tip of everybody's tongue like the biotechs were, but they are in bubble territory. There's no question about it in the action. But there's no parabolic move in the weekly, but there is kind of a parabolic move in the monthly. All right, well, I'll be back. Basil Chapman. We'll look at more questions that I had. Tiger Technicians Hour, and the Dow's up 81.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Everyone, we're back. Basil Chapman, Tiger Technicians out. Dow's up 72, S&P's up 11. Look at the 2-minute chart. Yep, I made that peak E right there. As we went live on air, 242.25. I put that down arrow in. Let's see where this takes us here. Stochastic, near some support. MACD still quite poor. Unbalanced volume, trying to find support. I think we're going to retest the lows that were made back at 10:20, 10:30 this morning at the 23.9825 level, and we're at 2400. All right. Let me just see this here. Oh, here's the 10-minute chart. We have pulled back from peak E. I just want you to show you that it doesn't matter the time frames. The techniques should work in all as a fractal. You should get the same kind of patterns repeating. Here's the H pattern in the gold chart, the 10-minute chart. It made a high at 1237.4. Peak E in the Chapman Wave 10-minute chart, pulls back. It's now at 1233. If it breaks under 1232 support, then it can go down deeper. That's the reason why I thought that it was a good move, but it was more an emotional move in gold and silver. But I do like some of the way some of the gold stocks are acting. We looked at Royal Gold. That really acted very well. So in the crude oil, what was that? The question was in the 10-minute chart. Yeah, we made our peak D. That's what I call it's got that inverted hat right there. And what we're looking at, what happened? A, F, C, oh, sorry, G. I meant to put a G. That's what it was, a G right there, edit. I knew there was something wrong with that. Typed it incorrectly, that's a G. And as such, we're going to watch this very closely for crude oil. It's up $1.29, 49.13. Any 10-minute bar that closes underneath 48.90. should see further selling. Okay. Now, question I had was about JP Morgan. Let's get out of these 10-minute charts here. 10-minute chart gone. JP Morgan looking at the daily, weekly, monthly. And we've got JP Morgan holding steady up 32 cents at 87.24. You see, until yields really push much higher, and I'm not sure yet whether they're going to do that. I think possibly lower before higher. We're looking at sideways consolidation in JP Morgan based on the daily, the weekly, even the monthly. Look at Goldman Sachs. And this, when I did my webinar a couple of weeks ago, I said Goldman Sachs is going to be a really good clue. And it's up today. It's up 36 at 25. Sorry, that's not Goldman Sachs, Genpact. Oh, what a beautiful looking stock, Genpact. So let's go to Goldman Sachs. I was say that doesn't look like, yeah, that's Goldman stock. Sideways action up 2020, up 1% today at 225.02. Look, it's the weekly chart that's suggesting that there's arch formation. Really, we've got to keep that in mind. I don't think the XLF and the financials are ready yet for a big move. Famous last words, maybe, but that's what I'm thinking. Until the XLF, 2372 up 15, can really start to trade in the 2450s. It goes to 2450, 2475. I think yields will be higher, and I think that XLF is ready for a really big, strong move. Until then, it's just sideways. Question about GE. What is GE doing today? Oh, my God. Another down day, minus 28. GE, someone says in the day, oh, peaking in the day, says, still have faith in longer term for GE? Do I? GE weekly at moving average now. Yes, I do have faith in GE longer term, but this consolidation is going to take its toll. If I had to put all my reasoning together, and if you don't mind, I'm going to take a moment here to show you some things. My thinking is that we're in for a consolidation, and it's about to start. It's very close. Just a little bit of residual strength left. If you look at TAL, which is the number one, you remember I looked at BEAT, B-E-A-T, a while back, and I said, well, now I want to show it here. BEAT, B-E-A-T, right there, biotelemetry, and I said it's been number one. It's been the number one investors business daily out of the top 50, and it looks fantastic, except I've got a round number 34 high in a leg D. I think it's about to pull back based on my technical work, leg F in the weekly, leg F in the monthly, and lo and behold, I didn't have a chance to do it. I'm not sure I would have done it, but it gave a peak deconfirmation at the close on the 3rd, and the next day news was not good, and it plummeted and went down to the 2650 level. Now it's at 2813. So that was number one. Then it got bumped off. Now you've got TAL. This is TAL Education Group, Chinese after-school tutoring. Peak E in the daily. Leg G/C in the weekly. Leg F, possibly F. It could have recycled, but I'm calling it F for now in the monthly. And I'm saying that we are looking slowly but surely at so many of these leader stocks that are bumping into resistance. And if I go to Amazon, and I showed this during Larry's show, look, Amazon is stuck in the Chapman wave, up channels, inside track, repellent resistance zone, right there. The green and red lines, pink lines, dashed lines at the top. Look, right there, and it can't get out of it. It's been there for a month, and it just can't break above it, above green. It would need to get, it said 958 down 3. Earlier on it was up, now it's down. And it needs to break into the 973 area, and then that's going to be very bullish. But I don't think it's going to do that, number one. So that's Amazon. Let's go to Apple. Apple, same thing. There's the dash trend line. It's right on it right now. Apple's now down 65 cents at 155.44 after making a new all-time high. This is the daily chart. Hey, wait a minute. What about Facebook? Facebook down 25 cents at 150.07. It failed right in that inside track first resistance line. Now it's at the support line. Can it hold it? Is it just going sideways? You know, in channels, what you do sometimes is you take time by going sideways. You don't have to break down and go all the way straight down. You go across to the support level. Well, it's at the first support level of the inside track green line. If Facebook at any point at 150 starts to take out the 148 support, I think it's going to test the uptrend major support line, which would be somewhere around 147.50. It needs to break decisively above the all-time high that was made at 153.60 back on the 3rd, and that would be very positive. I don't think it's going to do it right now. I think that the NASDAQ is starting to struggle. Could you now see a rotation into the other indices because of that? Well, maybe yes. So Amazon, Netflix, look at Netflix, NFLX. Bam, right into the Chapman wave inside track repellent zone, resistance. So when I put it together, I'm saying, actually, let's do this. Why not? Let me pick this up here. Lamb Research, LRCX. Lamb Research, let me go to my major charts. Lamb Research just been an absolute on fire. There we go. LRCX. On fire semiconductor. And 151.50 was the all-time high back on the 10th. Today's high is 151.39, 12 cents away from breaking above it. But it's walking the 9-period moving average, and it's starting. Look at the MACD turned down. Look at the stochastic 85% good, but turned down. But what's happening is that it's starting to test the 9 EMA. What happens is that 9 EMA is going to become resistance very soon. So I think it's very close to pulling back. Look at the doji candle from last week. If it closes decisively above 151.50, that's good. If it closes below 147.94, that's not so good. I'll be back. Basil Chapman, Target Technicians Hour. Dow's up 71.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So just to follow up on GE, my contention was that GE would pay dearly for the move to Boston from Connecticut. Financially, it's an eye blink. It's nothing in their big scheme of things. But distraction-wise, I think it was a big distraction, number one. Number two, I also think that within the context of a huge cyclical company like GE, a Dow component, it encompasses everything, but they also have for years. I remember when Immelt took over from from, I can just see him right now, from Boston. Oh, what's his name? Someone tell me remind me what his name is. GE, Jack Welch, of course. Jack Welch. And I remember him making the claim that he was going to just transform, he was going to continue what Jack had done, that he was going, and that was the exact top back in whatever year it was. And at the time, I remember thinking, GE, what's going to happen? They've gone into the financials like nothing on earth. Well, of course, they had to get out of the financials. Now they've gone into the oil sector in a very big way, energy and oil. Timing-wise, no, I don't think that's a very good idea. So I'm looking at G and I'm saying, is this old? Is this now nothing I should even consider? But you want to know something? It's been fantastic in predicting that the Dow wouldn't make a new high up until now because it's been acting so poorly. And that, as a benchmark, that's worked very well. So I'm busy doing something now to show you the one-to-one to the downside. We'll check out sugar and see what's happening over there. So GE, to go one-to-one to the downside, 2760s would be a target, and 2766 is a 200-period moving average. That is going to be the very strong weekly 200-period support that has to hold. So it isn't quite finished yet. And the arch formation in the monthly is really not a good-looking one at all. Okay, so GE has a problem. Let's see how the 2760s holds at 2801. And let's see if it's able to bounce to 2870 over the next couple of weeks. We'll be watching that closely. Now, so that's a couple of questions I had about that. So I wanted to know, here's a question about Valet or Vail. Vail. This is in the, okay, it's AB. This is at a peak B in the daily, but it keeps failing. It keeps hugging the 200-period moving average of 8.12. Can't get away from it too much, and the weekly chart is still flat. No, I don't see too much. 841 at 15. Valet, it's in shale. I can't remember exactly what it's in, but it's one of those companies that we watch real closely with, if copper or oil or whatever, any one of those minerals. Let me tell you exactly. Valet is South. No, SA is. Oh, there you are. A Brazilian multinational corporation engaged in metals and mining and one of the largest logistics operations in Brazil. Okay, Valet. And yeah. It's not great. I just don't think it's anything. It could bounce again, but it's gonna have to do a lot of retesting of the 8s. So I hope that answers that question. Bank of TF, we did all that. Oh, IBM. This is what that's doing today. So the question was, IBM has had a nice move today. I like that. Oh, that's the end of the show. IBM doesn't look great. I'd be very careful with IBM, even though it's having a bounce today. So I'll be back tomorrow. Have a great day and watch real closely. I think that we're still looking at a topping formation here. We'll watch this very closely over the next 2 days. Dow above 21,000. I have to be impressed. Dow below 20,900. Not impressed.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.